Yesterday we had the big policy. Governor Rajan decided not to move on rates, but he still did talk about an accommodative stance and easing liquidity conditions. Arundhati Bhattacharya, the chairman of SBI, joins in now to give us her thoughts on that. Ms. Bhattacharya, good morning and thank you so much for taking the time out and speaking to CNBC TV 18. First, your initial thoughts on the RBI policy?
Good morning. I think the policy was very much on expected lines. I don't think anybody in the market expected any movement at all. We are obviously very glad that the accommodative stance has been continued because liquidity is going to be a very big enabler for us in the period going forward. We also believe that the RBI, though the 5% is something that seems a little difficult today, but we believe going forward as the food prices come down, that will also be achieved. As you are aware, the vegetable prices, which was mainly contributing to the earlier month's CPI, those prices have already moderated. Though the cereal prices haven't, the cereal prices we expect will moderate once the kharif production comes in. So hopefully going forward, we will see the target being achieved.
Ms. Bhattacharya, good morning. The counter view yesterday was that maybe time was ripe for a rate cut now so that the transmission could take place. If it's back-ended, there's going to be a bit of an issue in transmission. Your thoughts on that?
Actually, as I said, the July numbers are still going to be a little elevated. If you've seen the vegetable prices, they've come up only in the last 2 weeks. So that will reflect into the August numbers. And if you are data-driven, as you have said for so long, then really speaking, front-loading it would be a little difficult. And I think that way the market also quite well understands that this time round it would have been very difficult.
Well, this was an iconic policy in the sense that it was the last RBI policy where the decision would be taken by a single governor. Now there's a monetary policy committee that will be set up and, they will be taking the decisions henceforth. What's the sense you're getting about a scope of further rate cuts through the course of FY17 and also whether the monetary policy committee will stick to that glide path of, CPI of 5% by the end of FY17?
First of all, I think, it won't be very different because even today, it is not as though the governor is not taking inputs. In fact, he even calls us bankers in order to take inputs. And then there is a lot of deliberation. It may not be others' responsibility. It may be a single responsibility, but still a lot of input is taken before that decision is made. So going forward, too, I don't see any reason why things should be very different. We still believe that one rate cut is at least definitely possible by the end of the year. So we'll just have to wait and see how that works.
Okay. Ms. Bhattacharya, since we have you with us, I just wanted your thoughts on one of the recent seminal moves in the markets where we had a private company like DHFL coming to market for raising 4,000 crores and got subscriptions worth 20,000 crores. What's that telling you about the overall structure of the market?
Well, one thing is that there is a lot of liquidity in the market. I think there are a lack of good issues as well. I also believe the confidence is slowly returning in the market. You are seeing green shoots in various areas. I still believe it's fragile at nature. It's not something that is very well established. But I do believe that there is a lot of money which is chasing good yields. So to that extent, if there are good issues, I don't see any reason why they should not get subscribed.
So finally then, since liquidity is abundant and, the RBI has significantly stepped up even open market operations, what are your own thoughts on monetary transmission? How important are all these measures that the RBI has come up with for monetary transmission henceforth?
It's very important for monetary transmission. In fact, last year's tight liquidity stance, we had been sort of about it because that was not allowing transmission. Liquidity is very, very important for it, and therefore, this is the right stance. You will see transmission happening over a period of time. We believe that a lot of transmission has already happened in the sense that today the MCLR basically is dependent upon the deposit rates. If you look at the deposit composition of Indian banks, almost 60% of that is interest sensitive in the sense that they are fixed deposits. The rest of it is current account savings bank, which by its nature itself is not very interest sensitive. So 60% of whatever the RBI has done, that is 150 basis points, that has actually got passed into the market, So that transmission has already happened. For further transmission also, we need liquidity. We also need further cuts. And I believe that the accommodative stance that has been given, what has happened also is that it has enabled banks to book certain profits from their treasury, which in turn will help them create the kind of provisions that are required in order to complete the balance sheet cleanup. In fact, there is one article that our economist had written where he has shown that in the earlier cycles, almost 64% of the provisions that were made came from treasury profits. Today, only 16% of it is being made from treasury profits. So obviously, with an accommodative stance, yields coming off, it is something that will enable the banks to book whatever is required in order to help in the balance sheet cleanup.
Okay, Ms. Bhattacharya, thanks a lot for your time today. Well, let's